This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
That's what brings the viewers back. That a boy.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
Good morning, everybody. It's Wednesday, July 9th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you got any questions or comments, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Overnight markets here at September corn down 3/4 at 397 1/4. August soybeans were down 4.5 at 1016 3/4. And September Chicago wheat was down 1 1/4 at 546 1/2. No export sales announcements here this morning, so we'll jump right in. Yesterday, President Trump, during his cabinet meeting, reiterated that August 1 is the drop deadline for sending out these letters and putting in effect these new tariffs. He says he's serious this time, so we'll have to see what comes out of that. Apparently, we still got a whole bunch of negotiating on the table, so we stay tuned there. New lows for corn overnight, so I know we'll talk about a little bit about that here this morning. And then it was interesting to see yesterday the administration talking about levying upwards of 50% tariff on copper imports, and we saw largest rally in copper since kind of the late 80s. So that was interesting to see. Guys, good morning. Short staff here. I guess everybody wanted to take a break talking about these markets. So you know what? We'll battle through, and we'll be the ones to do it. Dustin, I thought you did a really good job last night in our evening commentary, highlighting just some of the outcomes. Potentially if corn were to continue lower, and just how all these programs come together. And I know we've talked about it a number of times, but it was interesting. I got a number of calls yesterday from folks that watched the show and just wanted to talk through that because there's a lot, there's math to it, and there's taking some time and figuring out how everything lines up. But maybe just touch a little bit on that, and we'll throw it around the room for some thoughts.
Yeah, thanks, Dan. It's I don't want to get too bogged down the details of what I put in the letter last night. So if you haven't seen it yet, go look at that. But it's basically it's just showing the math of even if you have a 10% above normal yield, now that we have the hire of either PLC or our county as a payment on the marketing year average, if we just make an assumption that the numbers I'm discussing are, that the October average price for corn also happens to match the marketing year average at the end of the year, right? So if there's a reason for us to go to 360 corn, for example, I'm just saying in this example, we would stay at 360 for the cash average through the rest of the marketing year. If that were the case, we're going to do quite a bit better for just someone that has a true 95% policy through county, even with a 10% over trendline yields, which is pretty sizable, right? We're going to do better at 360 corn between Farm Bill and Arc County, assuming there's no issue with the caps, than we will at today's price. And then it just kind of goes through why that's the case. Now, you got an 85% policy. You've got a 80% policy. That's probably not going to be the case, right? I'm talking about 95% county-based policies. Those are much quicker to trigger, even with a large yield. At 360 corn, we'd imagine that there would be some sizable payments still to be expected for most growers with those policies, because we started off at 470, right? That was the average price going into the March 1st timeframe. So, and I just wanted to put that out there as like just kind of showing the math of it, because until you do these numbers yourself, you kind of have to shoulder these numbers and understand them yourself. Make sure that you're not just listening to what we say, and you're actually understanding why that's the case, and also buying into the same concept. Now, we have a very, I think, tedious marketing year ahead, because at this point, I mean, what's the average sale, quantity for U.S. growers? It's probably quite low. We really never were above profitability for futures prices. When you look back at like a farm doc break even or a Purdue break even, markets really never got there. At average yields, we've had some pretty good weather, so there might be above average yields that come in. And, we look back and say, well, we should have sold it all at 470. Or, I still think that if the reason we're going down today is not just from weather, but also from trade tariffs, there is a potential third payment option that may be coming down the line, which is, we saw from Brooke Rollins talking about that back in April. They said, if tariffs negatively impact growers, we'll go back and use the CCC program for market facilitation payments like they did during the last trade war. And those were sizable payments, and they had separate cap limits. So if we're talking elevated farm bill, you got a decent crop insurance policy, trade tariffs are partly why we're going lower, we might actually fare out better, at least in the first year, with a much lower price. I know it seems very odd to talk about it that way, but we might fare out better with lower prices than if prices are right where they're at today. And so from that concept alone, does it make sense to sell here? I even though I think that there's a very good reason the markets are heading down, right? If our second largest corn buyer, Japan, is not buying from us, right, it makes sense. We're going to have excess supply and we're going to have too much. So that's why we've been going lower. But at the same time, what happens if they ink a deal with them next week and China, right? And then we find ourselves at 480 corn, and we panicked as growers and sold a bunch down here at 420, right? There's no government support coming at 480 now. There's no MFP payment. There's no farm bill payment for those that have decent yields. So there's a much different outcome if we act on this right now. And that's a spot I don't want to be, right? I'd rather be able to control our own destiny, not have to rely on government bailouts and crop insurance. Like that's never fun. But it's the reality of the situation is we have to be careful here not to unintentionally harm ourselves if there is some sort of a rebound because of trade progress. And that would be, I think, where the real heartache would come.
Well, it's removal of of all of your emotions, right? Because it feels the worst towards the bottom, and it always feels the best towards the top, and that's a trading mentality. But certainly when we're running businesses, I mean, somebody's going to make the argument, well, if it goes at 360 and it's at 412, then why shouldn't I sell it? And for all your reasons that you've listed, Dustin, I think that you're and Justin makes this point a lot of times, like you're entering a trade, right? Like you're trading on an opinion versus looking at the math of it behind the dynamics. I think that's a very important thing right now. So taking the time to figure this all out, I think, is going to be uber important. Jace, it was interesting. I'm talking to a couple guys yesterday, and I think that through the northern part of the Corn Belt specifically, the full potential is there, right? I think that there's a potential for these guys to hit a home run and for this thing to be great. But I did think it was interesting that a number of them noted that they're using the water, that it's not like it can't not come. So yeah, we've got a pattern and we continue to see pop-ups and it's nice, but we've been on the edge a number of times. So I just, I think it's fair to state that like it's not a home run yet. And maybe touch on that a little bit.
Yeah, no, I mean, I think it's very similar to last year.
Mm-hmm.
Talking to customers in Northern Illinois, on our own farm, Southeast Iowa, a lot of parts of Iowa, everybody to this point says this is their best crop they've ever seen. So, I mean, they said that last year as well. Yeah, I would say we're maybe a touch on the drier side than last year, at least in Northern Illinois. So it's getting some timely rain, but I think we got 0.6, last week. So we ran air gears all week, and then we got some rain. And yeah, if we don't catch some of these rains there in the forecast, we'll be running them again. So touch on the drier side, like last year, right? We got some timely rain. Everything looked really great. I mean, a lot of customers in Illinois and Iowa, we're talking, huge yields. And, I think we had that drier weather come in August and, really pulled a lot of yields back by 20 bushels. So there is a lot of weather here. We still got to get through, and I would have loved to see what a wet August or some rains in August would have done for the national yield. So we had, have an idea of what we could do this year. So obviously we can push above that 180 in my opinion. I mean, I think a 185 is possible, but you got to really finish it through August and September. Market action right now is not surprising. After we had that, bogus speech from Trump, and then rain, and then rains, and you look at the forecast, 2 weeks of rains for Iowa, Illinois, for everybody. Makes sense what we're doing. I think you probably have to start trading those bigger yields. That's what markets do. They try to price in before that happens. And you got, anybody tried buying it on the ropes type of thing, and funds, love to sell it and kind of press it. Markets love to go further than they should. I think that's what they're doing right now. And they might end up being right. So, my guess is, if I had a crystal ball and if weather stays good, we'll trade. I've said this really since the Acres report. I'm like, God, if weather stays good, we're going to trade sideways to lower, and we'll kind of have these bounces and we'll have these breaks. And, bear markets typically don't just go straight down. Bull markets do sometimes, but they typically, they kind of do these chop type of thing and make new lows, and then they kind of run everybody in and they make new lows. And so we'll trade weather for a little bit. Like I said, the weather's not done yet, so you could still take quite a bit off the corn. Obviously, beans are still a wild card, in my opinion, on what they can look like by the end. My guess is if weather stays good, we're going to trade lower right into September, put in some kind of low. And to, everything that Dustin stated, right, all these safety nets and all these, and we've touched on this before of like, right, what do you do if you're in these huge payments and you're forced to sell at harvest? So I think that a lot of those conversations we're going to be having with guys, and, a lot of people are going to have to think about how they're going to manage that. But I think anybody with storage, right, or anybody that could find storage, or I think there's going to be guys doing the old, I'll just put it on the ground and try to cover it. And, and maybe that actually makes sense, to be honest. But I think the market is going to lose the interest of farmers selling once it gets past that harvest pressure, which is typically probably maybe less so than normal. And my guess is we bounce kind of out of that, and there'll be some marketing opportunities, kind of much like we saw this previous year. You didn't really have your best marketing opportunities unless you held on to it after harvest and saw some kind of post-harvest seasonal rally kind of stuff. So that's kind of the big picture my head's at right now.
Yeah.
We'll see. Things can change, obviously, but with all else being equal and nothing, that's how I see it.
I mean, we could get egg on our face, Jace, but I'm going to hold you to the fire here. Do you believe that the trouble that the East had and some pockets that have missed it, that really you could go to 185? I mean, I have a hard time believing that. I do.
Yeah, I do.
Because Iowa and Illinois can just carry it. I
think Iowa and Illinois going to carry it. I mean, I think we're probably not giving enough.
Nebraska.
How many bushels we lost last year with dry August? We lost quite a bit, in my opinion.
Point.
Again, you usually have something that is a little hiccup in yield, but I mean, we've had years where it is wet all the way through, and that is where we have not seen one of those well above trend line yields. And I think there's been a lot of debate if that's even possible, right? A lot of people say there's some plateau to these yields. We'll see. I mean, this will be the year. I mean, if we finish, this will be the year to see if we can. I think we can. I think we can. But
yeah, when you talk about like plateauing, I mean, let's look at last year. Even with that finish, there were more 300 plus field averages. I mean, so there's a lot in the bag. To your point, Jace, I guess I do agree with that.
Yeah, but there were also a lot of holes up in big producing areas of Southwest Minnesota, Northwest Iowa.
You talking about last year?
Yeah, last year.
Yeah.
So I mean, that adds up pretty quickly.
Yeah, I mean, I've heard that disease pressure tar spot, stuff like
Yeah,
that's
starting
creeping
to show up.
in a lot of areas a lot sooner than last year. I'm not an agronomist. That's usually a nothing, on if you try to say that's going to take off yield. But I've heard from agronomists saying that's kind of a big deal. Are people going to, not treat for that? Or if you treat too late for it, or are they cutting corners there on cost? Because why would I just try to pay the insurance guy back type of thing? But, but anyway.
Yeah, going to be interesting for sure. I guess last piece on that, guys. In your opinion, I guess be careful. Commercial is going to try to bid up new crop basis to try to squeeze some out and stuff like that. Probably something to keep an eye on, for growers that do have to move it, at harvest. We've started to see some of that take up a little bit. I guess any opinion there, guys?
I mean, we always like certainty. So if you have a lot of harvest basis risk, it makes sense to try to get that locked up if it's good bid.
Okay.
Just in my experience, anything post harvest, it often pays to wait, just because going out and trying to get a JFM bid right now, it's hard to know like that it's gonna where it should be, and often they start lower than where it ultimately ends up, in my experience. So
sure. Oh, good stuff. Right. I guess livestock here. I mean, new contract highs everywhere yesterday. And then first day of Goldman for hogs, we saw 3,000 drop in 3,000 in open interest. So maybe a sign that some of the fund positions going down a little bit. Guess what are your thoughts?
Well, yeah, definitely new contract highs, feeders, new all-time highs. So I mean, the rally won't stop. Everybody that was trying to call that top a couple of weeks ago is, probably making some margin calls here, just because it's just put everything right back on. I mean, I think there was a lot of rumors circulating yesterday, but it did seem like the roll really started to get more active, especially the August Oct in the cattle, and in the, as far as hogs go too. So I mean, I think that's a dynamic that generally causes quite a bit of volatility. Obviously there's going to be crazy rumors circulating as to why we were higher. I heard a couple of them, nothing really confirmed right now, but overall there was some rumors that cash was trading in the south at a little bit better prices. So once again, still haven't seen the confirmation on that yet, but that kind of early trade always kind of gets the market whooped up. So it just kind of feels like the trajectory is still higher. Once again, we're back into a price level that we really haven't seen before, and I mean, it still seems like it's still going here. I mean, they're just right now, you just cannot break this market with any kind of fear, at this point. So, I mean, beef prices right back up. Choices up $2 yesterday. Select up 93. I mean, I think everybody's expecting cash trade to show up between 226 and 228 this week, and still pretty friendly just based on the price action alone. Plus, trying to see if this basis is going to narrow as well. So, I mean, at this point, you've got some great opportunities here, especially in the back end of the market. I mean, February and April for next year already over 215. I mean, these are prices that I think guys were really holding out to see if it was really going to happen. So, I mean, I think there's going to be a lot more kind of aggressive looking at those margins and seeing about new ways to hedge, LRPs, put options, that kind of stuff, just to get a floor in the market here. And yeah, on the hog side of things, just a little bit mixed. I mean, it feels like we're flirting with some moving averages, down here, but cash came in relatively firm. I think that was kind of the saving grace here, is the premium right now. We're at 112.02 up $1.81 from the last quote. And managed money still holding record long. I think we've seen a little bit of liquidation, but it just doesn't seem like you're scaring any of the big longs out of the market. It feels like the hog market really wants to keep up with what's going on in cattle as much as it can. But it feels like we are running into a little bit of that seasonality and a little bit of a fear that we are going to start to see prices start to taper off as we kind of get into that August, September timeframe. So I think there's still some pretty heavy downside risk here in hogs, but we just haven't seen that really that big cash break to really kind of confirm that. So I think all eyes are still going to be on cash and carcass, for the kind of weekly direction here.
Very good. Appreciate the update there. Just came into the open. I've got September corn now down a quarter, 397 3/4. August soybeans are down 5.5 at 10.15 3/4. And September Chicago wheat's down 2.5 at 545 1/4. Tomorrow morning, we're going to get weekly export sales, 7:30 Central. We'll take a look at those, visit about those in the war room here tomorrow. If you wouldn't mind, throw us a like and a subscribe. We appreciate everybody that tunes in on a daily basis. Subscribing will keep you up to speed on everything that's going on with AgYield. Doesn't cost you anything to do so. So again, thanks to everybody that tunes in. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we'll talk to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.